headlines yesterday when we talked about Home Depot. Given the weather and the calendar, you said even though some of the numbers appeared to be light of expectations or same-store estimates, you didn't think that they really were. You thought that the estimates hadn't come down all the way. Is Lowe's disappointing, or is this were you basically a report that you were expecting?
Well, good morning. This is interesting because if I'm digging through this Lowe's report. The first number that grabs my attention is that 4.2% domestic comp. Remember, we talk a lot about the comp spread between Lowe's and Home Depot, and this is the first quarter in a while that Lowe's clearly out-comped Home Depot. So it's a 4.2 versus Home Depot did 3 yesterday. So that in and of itself is a huge positive for Lowe's. Now, what's happening below that, and we're going to obviously need to get more clarity from the company, but it seems as though there's this reinvestment cycle. And I read the release very quickly. CEO Marvin Ellison in the release is basically saying that they need to make certain investments in order to drive the sales performance. That could be a negative, but again, just like I said with Home Depot yesterday, I think when the dust clears on this, it's going to be a positive. I think the market's going to say Lowe's has been undermanaged for a very long period of time. They figured out what they need to do. They're starting to see the results in better sales. There's just extra investment that needs to be made here in the nearer term.
You're talking about where he says the ineffective legacy pricing tools and processes, that those are things that they're investing in. But he also says something about cost pressure. What's that?
I mean, I would be guessing here, but it's probably, I mean, the pressure that most retailers are talking about when they talk about cost right now is labor. Oh. You know, and look, the problem with Lowe's has been store level operations. Now, I have not got the sense that they don't have enough people working in the stores. I just don't think the people are trained as well. But that it could be something to do with that. Basically, the labor they have in their stores.
Transition in the merchandising organization. That's a good one to throw in there occasionally for weakness. Gross margin contraction. As I said, we're still not much going on pre-market, but I'll be interested to see where that is. But when I hear you say that they've made up some ground on Home Depot, I think, I don't know, I initially thought that there is ground to be made up. That's why it might be a little bit better, because they're laggards, are they not, in terms of operating performance?
They have been a laggard for, I mean, almost a decade now.
So a point on the comp stores is actually showing that they're making some ground, and maybe this guy will finally close the gap a little bit more. Ken Langone doesn't think so, though.
No, that's a bet I'm making in recommending Lowe's as aggressively. And keep in mind, Marvin worked at Home Depot.
I know.
He ran stores at Home Depot, and and look, Home Depot's a great company, and a lot of great people working there. I think Marvin was very much instrumental in driving the performance of that company, though.
I think you're right, though, that Lowe's, there's a lot of low-hanging fruit. They haven't invested for a long time. The back office situation, their supply and restocking situation. I mean, if they're investing in that may be a good long-term signal.
I think so. And again, we're going to see how when the stocks start trading, there'll probably be some type of knee-jerk reaction. But again, as people start to really think about this, and given what we're talking about here, this has been a laggard for a long, long time. There's an opportunity to invest more in this company and drive better performance.
They've altered some plans in Mexico. That they had planned to exit the Mexico retail. I don't know whether you saw that, the retail arm. That's part. I mean, the guidance is not so great. 565 is 40 cents. That's the high end of the guidance, 545 to 565 for the year. That's 40 cents below where Wall Street is.
You have to be patient.
They missed 11 cents this quarter, right? But that could be 40 to 60 cents below where. That's 10% miss, right? That's reinvestment. But you think that could be digested by people once they look into what it's resulting from? So you got to buy. You got a strong. So you came in with a buy. You see this,
he likes it,
and you still have a buy.
Yeah, obviously I've got to dig through this more, but I'm looking at this now and saying Lowe's is doing what Lowe's needs to do. And look, one part, and again, if I'm look, this maybe one of the knocks on Lowe's is going to be, why didn't you see this beforehand? But this company has been undermanaged for a very long period of time, and it takes a while to figure out what needs to be done. But the key there, again, certain metrics matter more than others. A 4.2% domestic comp in a quarter when Home Depot did 3 is a big positive for Lowe's. And look at that, the guidance for the year. Yes, they did take earnings down. They were previously at 6 to 610, 545 to 565. So they took it down by a little more than 50 cents. But they reaffirmed that comp guidance of 3%.
What did you hear on the Home Depot call yesterday?
There were 2 big points that Home Depot was making, which I thought were interesting and really reflective of where we are kind of in the retail economy. But Look, they said that the sales weakness, and sales did track below their plan in Q1. It was really a function of weather, particularly in February, and then, interestingly, weaker lumber prices. And for these home improvement retailers, lumber prices are a pass-through. So they base wherever lumber's priced, they pass that to the consumers.
So that hurt their revenue, just the idea that prices were lower.
That's
Didn't
right.
hurt the profitability, hurt the revenue. What can you tell us about the U.S. economy based on what you heard yesterday from Home Depot and based on this initial release from Lowe's today?
Yeah, look, from my perspective, and I have a relatively narrow window into the world when people ask me about the economy, but the economy's in good shape here. You know, if I take Home Depot's comments yesterday, and they're basically saying that if it wasn't for these outside factors, weather and lumber prices, our sales were tracking 4 to 5%, which is a good number for Home Depot. Obviously, we talked about Lowe's having a better number here. And then even companies like I spent a lot of time talking with AutoZone yesterday. They did a 3.9% comp. And what's interesting about AutoZone, that they sell a product that people don't necessarily want to buy, right? But if they feel better, they buy it. And so if AutoZone's doing a 3.9% comp, I think that really speaks to the underlying strength in the economy, particularly for lower to middle income consumers.